Most of us will spend about 90% of our time thinking of what to buy and at what price we should get in. In fact, this is only about 10% of work done. Try focus on this scenario instead. After getting into a position, how are we going to manage it with either a calculated loss when the market go against us, or how should we take profits when the market performs better than our expectation? As usual, we will do a few case study on how I manage my trades for this whole entire year. We are looking into the example of the US indices. In this case, we're looking at the Nasdaq. And for today's tutorial, there's two segments. The first segment we're going to discuss about most of us are spending too much time on getting into a market. And I'm going to use this very classic example on Bitcoin, why many investors got stuck at about around the high. And for second segment, we're going to discuss about the steps to manage our trade after an entry is made. And if you've been following my this training series, this will be the seventh tutorial and the last part of this series. And with that, I'm going to wrap things up. And just very quickly, I just go through what we've discovered so far. You can always visit the playlist that I've created. The first part, we spoke about the buy strategy, sell strategy, and also how to develop between the short-term, mid-term, and long-term view whenever you saw an opportunity in any market. And for part 4, we've discussed about how to choose between the time frame. Should a trader be using a 5 minutes chart, 15 minutes chart, daily chart, weekly, or what? So I understand a lot of traders struggle with choosing between the time frame to use. So that part 4, we have addressed that issue. And part 5, we discussed about the entry. And the last tutorial, we spoke about the exit. And today's the most important, where we're going to discuss about after an entry is made, how are you going to manage your trade? So again, I've provided the links below. You can always visit my YouTube channel as well. I have created a playlist. Look for trading series. You'll find all the 7 parts down there. And before we get into the topic, please do take some time to read into the disclaimer right here. All right, let's get started on the first topic here about most of us are spending too much time in getting into the market. Now let's look at this example on the Bitcoin, and I like to analyze the market using the Bitcoin CME futures. Why is it so? Because it is an exchange product, and for that reason, I could study into its volume. And have we spotted the peak when it was trading above 60,000 back then? Last quarter of 2021, the answer is yes. Now, if you could see here is that there was an inverted hammer on this weekly chart and followed by a false break and another inverted hammer, and that forms a double top. And that's what we have discussed here on this forum that I have called Timing the Market. So every week I will showcase a case study. So on the week on the 25th October, and I give this case study to the members, we spotted basically this inverted hammer down here. And we have some days of discussion. At the end of it, I will give them my insight, what I felt. So I felt that the cryptocurrency or the Bitcoin at the point in time is getting really topish. Maybe it's time to take some profit and turn short. And now, let me sidetrack a little bit here is that whenever we saw an opportunity in any market, we have to quickly derive into its type, the strategy. Is it for investing or is it for trading? Now, in a very first level way of understanding risk management is this. For investing, we can invest without a stop loss. For trading, we have to apply stop loss. Now, I think many of us have the similar experience that I have, which is especially when cryptocurrency was still in this bull run above 60,000, you may have met friends that for coffee, and these friends or acquaintance suddenly became the expert in cryptocurrency. And they say typically will say that I have invested in cryptocurrency, and they will encourage you to join them as well. So suddenly they became an expert in investing into cryptocurrency. And the very first question I will ask them is this. Um, could cryptocurrency is intrinsic value be calculated? And of course, they will get very tongue-tied. And of course, that sent me in this little journey here where I spoke to really the expert in that field about the intrinsic value of cryptocurrency. And none of them give me the answer that this intrinsic value can be calculated. And for that reason, in any market, whatever you deal in, if its intrinsic value cannot be calculated, it means that that market is not for investing, it is for trading. And for trading in this case, for today's tutorial, is this. The rule is that we have to apply stop loss because we are not into the business of dollar averaging, keep on investing in them until it move up. This is not investing. That instrument, cryptocurrency, is for trading. So we are very clear about that. And let me just showcase another tutorial that we have. And subsequently, this is on the beginning of this year. That is on the 8th of February. We also saw that there was double top, and we discussed about that. At a point in time, it was around 40,000. It was about here, and we believe that market is going to continue to move down. And today, what we're seeing here is at 16,000 here. In conclusion, many are still stuck with their crypto position. The fault really lies in not knowing how to profile between an investor or a trader. Many just rushes or getting into it because it was hot. This is the fear of missing out syndrome. You can refer to part 4 of this series, choosing between the time frame, where I discuss into greater details between the investing and trading strategy. This example on Bitcoin is for trading. Therefore, we have to be mindful to manage its risk all the time. When the market clearly given us some warning signal, like the inverted hammer and double top that we have discussed, we just have to execute it with an exit plan. Now let's just go back to the second part, is about the steps to manage our trade after an entry. For the US market, I think if you've been following me, on the third week of 2022, basically what we have discussed is that it have transit from a bull market to a bear market. Now, before the third week of 2022, basically for the US market, I was an investor. But after the third week of 2022, I'm seeing that the market have moved transit from a bull market to a bear market. So on the third week of 2022, my strategy have changed. From an investor, I became a short-term trader in the US market. And do visit the part 4, choosing between the time frame, where we discuss about being a short-term trader. The holding period is between about 2 days to 3 months. Third week of 2022, I've transited from an investor to a short-term trader, means that I'm very mindful that every position is about holding period is between about 2 days to 3 months. And I'll observe about all this turning point. As you could see here, the last tutorial that we discussed about the exit, I also spoke about there's this cycle that I observe about 12 weeks. Now, I want you to follow my pointer here. As it move up, move down, it move up. That's about 10 weeks, but my topic was 12-week cycle. It's about there. As it move down, move up. From here, it move down, it move up. That's another wave, and that's another wave, and that's another wave, and that's another wave, and that could be another wave. Now, each wave is about 12 weeks, about that. Now, every turning point that we could see here, we could see that there was a bearish body, hammer, hammer, inverted hammer, bullish body, bullish engulfing body, bearish body, bullish body, and it shows me an inverted hammer with that 12-week cycle that we've discussed about it last tutorial, where I think this move with this inverted hammer is going to bring us into 2023. The market is going to continue to be pretty much bearish. That's what I'm seeing here. And kind of it sums up the second segment of today's topic, which is the step to manage our trade after an entry. Is this that we have to identify that if this is for trading, it means that the holding period is between 2 days to about 3 months. I will leave it to you, because as long as the risk management is being taken care of, profit will never be an issue. 2 days profit is still profit. Or if you can stretch to a few weeks, that really depends on the market. And let me just describe about what you're looking here is that the micro E-mini index, it states that every quarter point is 50 cents. It means that 1 point is $2. 10 points is 20, 100 is 200, 1,000 point is equal to $2,000. And I always advocate that as a trader, you have to know what they're dealing in. Is this 100-point movement that is going to cost you $200? It may cost you $200 if you make a wrong judgment. Are you feeling comfortable with handling this contract? If you're comfortable with it, this is a good contract for you to get started. Compared to the early example on Bitcoin, we can clearly see how I have managed my strategies as a trader for Nasdaq. 2 points here. Number one, trading into a specific time frame between 2 days to 3 months. And number two, at the same time, mindful in managing both the opportunity and risk or stop losses whenever a reversal signal or biting point surfaces. This is the last part of the trading series. The purpose is I hope to create a lifestyle of investing and trading into longevity. I will encourage you to go through the whole series. It will take slightly more than an hour. And you can start with the first part on the buy strategies. Do follow me on my next quarterly live webinar. We will study and discuss into the current markets. You can find the sign up link below. Also, if you enjoy researching the markets and its opportunities with some help from a platform like mine, I have included the discount link as well. Thank you for staying true, and you have many great trading weeks